European markets are lower as German data disappoints. U.S. futures are also down as the Fed may slow down its bond buying program. Will the market's upper range hold, or will it see a 5% correction this year? I'm Brittany Umar, and the morning call starts right now.
Good morning. My name is Scott Redler, Chief Strategic Officer of T3Live.com.
And I'm Brittany Umar, and together we bring you Morning Call. So as we said, futures are down this morning on talk of the Fed tapering and rising rates. And as that third pivot starts to really build, could we see this market, which has been very strong, get derailed?
Well, right now the market's trying to figure it out. And yesterday I think it was good that, after we gapped up and pushed higher, that finally we sold off those highs. We've been talking about this upper wedge type pattern building, since last Wednesday's outside day. So it seems like it's coming into fruition where, last week you were able to buy the down open on Thursday and Friday for a cute tactical trade. Then yesterday, if you held it, you could have sold some, taken profits. And then some people were looking for a short versus that Wednesday high to create a lower high. And now today we're gapping down. So if this pattern continues to build, maybe this morning could be tactical to the long side as, we have more data come in.
Now, why don't you show us a visual of that pattern so we can see what you're talking about?
I love visuals, and here you go. Look at the S&P, guys. Okay, first of all, this was, the first tradable pivot where, remember we broke above 1474, continued to follow the 8-day. We pulled in about 3.5%. From there, we bounced back, held higher, and continued higher. That was wedge pattern number 1. Then this was wedge pattern number 2, where you remember we had that breakout failure. Okay, remember we busted through this 1576 and it failed. That led to a move to the 50-day. From there we bounced up. Then we wound up breaking the midway point of this wedge type pattern, or one of the points, and then we actually got above this, this descending channel, and then held above it right here. This took about 4 or 5 sessions before making another move. So last Wednesday, here was your outside day, led to some follow through to the downside. From this high here of 1687 down to the low was about 3.5% or so. Yesterday we put in a lower high at 1674. Today we're opening right around here, so it would be interesting to see if we can come off those lows like we did late last week. And for me, I came in very light. I'll probably try and buy a little bit, versus this area and see if this pattern could build. And then finally, we'll get some type of just say closure on it, on whether or not we could see our first 5% move to the downside in 2013, or this is the third same pivot type area before higher prices to come.
Well, now if we go back to your 2013 thesis, one position Scott talked about for the potential of rising rates was going long the TBT or short the TLT. Would you say at this situation that we're at right now, is that thesis strengthening?
Yes, you want to put out a thesis out there, and then you want to wait for the data to come in the market to confirm it. So this way it's not just an opinion, because there are way too many opinions out there in the market. And at first, the TBTs, worked out in the first month or so, and then started to fail when it looked like our data wasn't getting stronger. Recently, they've been on a big run where, if you look at the chart of TBT, you'll see that, we just came up back to some key resistance going across the board. Now, on a micro basis, this move got ignited right here. Look at this gap up. Okay, you had a gap up, appetite, went sideways, and continued and finally stretched all the way into resistance. So, what I would say time frame wise, in my thesis, I said, I think I outlined 6, 7 longs, and this being one of them. It might, come into some resistance right here. So I would think that, if you could potentially buy into some type of pullback into this 68 or maybe even 66 range and put it in the draw, because these things definitely don't trade great, or to trade poorly sometimes. I do think that it could help you over the next 1 to 12 months, and at some point this could be as high as 80. And if you look at the flip side, the TLT, you will see that I've outlined macro head and shoulders patterns a few times over the course of the past few years, and sometimes they take a lot of time. But if you look here at the left shoulder, the head, the right shoulder, we just went from 125 down to 113, so it's a bit oversold and it could bounce. We broke below this 116, but overall, this pattern triggers. We keep seeing positive data, and at some point rates have to go higher, or in my opinion should go higher. This could see a move down to below 100. So I would not micromanage this. If you want to have a, if you're just say a not a distinguished, but a seasoned investor, and you want to hedge somewhat against rates rising, if you do see a bounce back to retest to 116-ish, that could be where you reshort. I think there's no reason why, or maybe it goes a little bit further. 120 would be the line in the sand, and then I would be dead wrong, I think, if we get above 120. But overall, this pattern tells us that rates should rise, and this is, I think, a good vehicle that if you put it on in the beginning of the year, because a lot of people read the thesis, 2013 thesis, December, like, oh, let me just do a little bit of everything that he says. You've probably been a little whipsawed around and happier now. If you didn't do any of it, I still think there's opportunity, but you might need a few weeks of choppiness before it starts to pan out for you.
Well, speaking of some of that opportunity then, would you say it's safe to say then that equities can definitely still go higher as rates go higher, just maybe not obviously at the same pace?
Yes, I think that's it. Well, right there, we're up, I think, 15% plus in the S&P. We're not going to. I don't think that we're going to see double that by the end of the year. This would be a great year on any other given year. So maybe it'd be nice to see some type of more corrective activity than we've seen. Maybe we see 5% correction, maybe an 8% correction, and then regroup, and then in the fall rally, and then maybe make new highs into the new year. But I don't think people right now would like to see the market just, get up and go, break above 1687 and be 1725 by July 4th. So, granted, we don't know what's going to happen at this particular point. We know the wedge, we know the levels. I think a lot of people have taken some risk off to play it out tactically, and within the next, maybe 3 to 4 sessions, we'll see, which way it's going to pan out.
Well, we can only play with the cards we're dealt, right?
Yes.
And one of the hands we have right now is healthcare. Healthcare has been acting well. There are healthcare and biotech stocks that have registered some pretty solid gains recently, led the way by WellPoint.
Yes, we've talked about rotation, why the market's been holding in there. It's because every few weeks or quarters there's different groups that take the baton and continue higher. You look at the chart of WellPoint here, this has had an unbelievable run. Okay, I haven't spoken about this much, and people ask me, why not at the healthcare or WellPoint? I'm like, because I just can't be in everything. If you look at when this descending channel broke right here and it extended higher, it still looks good. You take a closer look here, it is above the 8-day moving average. A lot of things pulled into the 21-day during last week's correction. This didn't make it down that far. That's why it acted well yesterday. I still think this looks good, and it's pretty much buyable on the 21-day, and something that if you have a macro opinion on WellPoint to be invested in, technically it's acting well.
And how about United Health, which gained over 2% yesterday and closed on highs despite afternoon weakness in the market? Would you say this is on the verge of a breakout?
Yeah, this, if you take the name out of it, which I don't know that much about the name, and I looked at this chart, I would get excited. I'd say, wow, look at this consolidation up here. Look, gap down, negated it, held higher, held above the 8 and 21-day, tried to show some power yesterday through resistance. Who knows, the futures are down a little bit, maybe it's down a little bit. So traders that aren't that committed to it, perhaps you look at it, for a negative to positive move, and then if it were to get above yesterday's high of 63.58, you could see continuation. So this looks like a nice pattern.
Now, how about CELG? This one climbed above its 8-day and went as high as 126 before selling off a bit in the afternoon. Looking at the chart, would you say it looks like it could just be a pause before more higher prices?
Yeah, this one, as a trader, I've gravitated to it more, and I know it a little bit better. You look at the chart here, we've talked about this, off the charts a few times, and that's been one of the focuses, and that was right around here. That was right when it broke above this major channel. And the reason why we looked at it here is because look at the sizable potent move right here. You have a potent move like that, and it doesn't go down and goes sideways. That tells you it could continue, and it's continued. And now it's just getting a little bit choppier. It's struggling to hold the 8 and 21-day. Yesterday, I think some traders had a little cash flow trade when it went above this, but did a little bit of a doji. I would say be long this one if you want to be long this with a 120 stop. It hasn't broken the 50-day this entire year. So if that's the case, I think you could stay with it, but just be a bit tactical. Sometimes there are trades like you had right here, but I don't like when it breaks out and then fails real quickly. That tells me it's not ready yet. So just, if you want to be on alert and have a high level stop, here it is right around 120.
And Biogen looked great yesterday, closed the day up 2.4%. Would you say that this is among the standouts in the group?
This is definitely a standout, and this is also one, like besides CELG, some traders have been gravitating towards this, but I have a rule that on the third up day, if you look at the chart here, it's something that it's hard to initiate, and this has had a few choppy up days, and it finally extended yesterday. It's a little bit away from the 8-day. It touched the 21-day only, twice. Actually, that's where I'd rather see you buy this. If you're trying to buy a dip in this, you buy it at the 21-day. okay, which were very far away. If you trade it for momentum, okay, you've had a few of those. Right here was a momentum trade. Right here, it's trying to become a momentum trade, but I guess it's a little scared considering the fact that, market might correct a little bit. But overall, very strong stock. If you're in it on a macro basis, you have a trend here, both are strong. If you're looking to initiate a new position in this, I would just wait. The 21 days has been a better initiation.
And just getting another name in this group, AMGN held the 8-day on the pullback yesterday. What are the levels you would watch here?
This one has just been it's a choppy mess recently. It was clean, and then after its earnings, it just turned into a consolidation mishmash. And if you look here at the chart, this is what I mean by mishmash right here. Okay, it was a clean move. It could do no wrong. Remember this, gapped up right here, didn't fill the gap. In our swing trading course, we talk about how strong gaps, pro gaps could ignite a move, and yet a first move pulled into the 21-day, and then pow, look at that. Then here, gave you an outside day actually before this gap down, so you had a reason to sell it, and besides this run, you had a reason to sell it. But if you look now, overall, what it's really done is it just let the 50-day catch up. It's consolidated a pretty big move. If you're an AMGN believer, and I don't know that much about the fundamentals of AMGN, I know it's just like a mega cap bio, and I've traded it from time to time. Here's your resistance. If you want to be long it versus the 50-day, because it's really never closed below it. If it closes below it for more than a day, which happened here, maybe that means it could go lower. So at this point, stay with it. But for a trader, I don't think it's going to be anything exciting until it gets above this 108, and then maybe it could fill more of this gap here. But overall, it's just in one of those mishmash modes.
All right, well, coming up, we're going to go in the trenches with some more setups to look at. First, a quick commercial break. We'll be right back.
I'm Evan Lazarus, Chief Knowledge Officer for T3Live.com. You don't become a great trader by watching videos and taking courses. You become a great trader through live screen time. Accelerate that learning curve by tapping into the experience of seasoned professionals. Currently, we're offering 5-day free trials to each of our 4 mentoring rooms. In the mentoring rooms, we teach our strategies in the context of the live market. To sign up for a free trial, go to the T3 Live education page, fill out the form, and get started when the next trading session begins. We hope to see you in one of our mentoring rooms.
We're back and going in the trenches with some more setups to look at out there right now. Take CVS, for example, which had a few days of digesting recent gains. Got it there. And after that, it's really powered up over the last 2 sessions. So how much room to the upside would you say it still has?
I think if it holds above yesterday's gap for a session or so, maybe even it opens lower today with the futures and goes higher, then you get the breakout trade. If you look here, strong trend, strong group. I would not be going to town on this right now, but I would say that you look at this trend here from November, very strong. You look at this accelerated trend, very strong. It's holding the 21-day, gapped up, held the majority of it. So maybe some sideways work, and then here is your breakout level right around 60, 70. So if this market holds in there and they let breakouts happen, CVS is a nice setup for that.
Yeah, and if they're letting breakouts happen, what's the deal with Hewlett-Packard, which also digesting its big earnings move? Seems like healthy action. What's the setup here?
Yeah, this. If you look at the wide range bar you saw in earnings, it was fast and furious. And if you look here now at the chart of Hewlett-Packard, you will see, that you're holding the top third. Here's where the gap starts. Didn't even come back and retest that. So, there's a lot of shorts locked up in this thing, I would think. And, it looks like people are waiting to buy it. Maybe today, goes from negative to positive. And if it can go through 24.95, this can continue. It's been very surprising to me. This stock was left for dead in November, and now it's acting very well, and it remains a good vehicle. So don't question it. Just look at the price action.
And Microsoft still looking strong, held above the 21-day on the recent pullback and traded back to highs yesterday.
Yep, short term, this one is it's almost a go-to stock. Believe it or not, Microsoft's been a go-to stock ever since Goldman said sell it at 29. Now everyone's been upgrading it between 34 and 35. And if you look at the pattern here, it's been very strong. Okay, here is when Goldman Sachs downgraded it. Good job, guys. And then here is your igniting gap. Okay, and then from there, the quick move followed the 8-day, went a little bit below, went again. Pulled back, was viable, and now it probably needs a little bit of time in this range. It's probably opening a little bit lower with the futures. Let it build in here, and then I do think it goes again. I talked about, I think, 37-ish for this stock. maybe you really have to see it more from the weekly chart, because the weekly chart is showing you how you've had a multi-year channel here in Microsoft that it's busted above and looks really good. So if you think about how much consolidation there's been in this stock and how little movement, kind of like that Walmart thesis or the Google thesis. Well, on one level, here's where it just broke above, and now at some particular point, I do still think it gets to at least here, and then if they actually start being seen as an innovator and people still want their yield and the liquidity, who knows, maybe at some point in the next 12 months it could even see above that into the 40s. But overall, this has been acting much differently, and it's been a nice vehicle for traders and investors who bought the Goldman downgrade.
Yeah, so Microsoft practically becoming a go-to stock. How about Cisco practically becoming a go-to stock? Held the gap again yesterday. Would you say that higher prices are still in store here?
Well, it's interesting because it's just another mega cap, okay? And this one also has a yield, it has liquidity, it's been performing better, earnings-wise. And if you look at the long-term chart of Cisco, look at the long-term chart here, you will see, obviously, this was back in the tech days, boom, boom. And this too, it's just starting to, on a weekly chart, look at that, it's just broke above a series of lower highs. So it changed its weekly trend. Here's a high, lower high, boom, broke above it. You go to the daily chart and you will see it has a gap from earnings. Okay, very nice gap right here. So we talk about how if gaps don't get filled, that means people are willing to pay for it higher, and the shorts are probably trapped. So a little bit more sideways action. This could be something where if you have positions on, you stay with this above 24, 25, it could continue to go. And I think I talked about 27 at some point this year for Cisco, and I still think that's the case. I still think, let's go to the weekly chart where resistance comes in. Let's take a look. Here you go. This on the weekly chart is a spot, and there's no reason why that if this current composure continues, you can't see that for this mega cap with a dividend yield.
Nice. And Starbucks gapped up and held the gap yesterday as well. Ready to make another move higher?
Maybe. This one looks a lot like the market, where it gapped up versus the old resistance, and it looks as if it's in the game. It pulled into the 21-day, gapped up, closed off the highs, probably filling that gap right now. I would think I wouldn't be in such a rush to buy Starbucks, but overall it's acting well. It's in this wedge type formation as well. Last time it ignited was right here. At this point, it's in the game. If you're a macro owner of Starbucks, I wouldn't sell it. If you're a trader, I think it probably needs a little bit more time.
All right, time for some quick hits here. Let's talk Tesla, which ignited higher again yesterday. Does it need a little bit of a break here?
Yes, well, I sold mine yesterday. I sold it early, but for me on day 3, I always take things a little early because I'm the risk averse, singles, doubles nature. If you look here though, it continued to close real strong. Okay, when you want to look for a good setup, you want things to line up. And if you remember, this was Thursday, by the way, when the market was actually pulling in, and this was Friday's market pulled in, went positive. On both the days, market just could barely go positive. Tesla did not wait. That showed you relative strength, and it closed at these highs here. So this was your follow through. Now, I would say it's a little bit of a complicated long, but also a complicated short. If it does get above 110.75 today and goes positive first, you could see an additional squeeze. If you have not been long Tesla this entire time, I would say buying it here for the first time could be complicated, but also anyone looking to short this thing has also been complicated unless you shorted on this outside day and covered into here, which was a nice plan we talked about in the Wall Street Journal. But anyway, this was, there's your pivot, okay? If it squeezes through, maybe guys will go for a quick trade, but then just be careful because if it comes back below this pivot, maybe you get some kind of topping tail, and then that could cause a little bit of a rest. But ultimately, it feels like the demand here for this stock is there, and that in the next 3, 6, 9, 12 months, this could be 150 plus.
All right, well, how about Netflix, which finished the day down 6.3% yesterday, looking pretty weak? Would you say this is an avoid?
Well, yesterday it was if you owned it, sell some. When it was down $3, it showed relative weakness. So you look at the chart here, it busted through. First of all, this was your first engulfing bar right there, and then it traded below this upper range. So that was your high-level stop if you wanted it. Then it tried to bounce back up and then was sold off quick. Okay, we talk about relative weakness. Well, yesterday in the first half an hour, I think I pointed out, I might look at the relative weakness in Netflix, and meanwhile, boom. So it went from down 3 to down a lot more. You could have gotten out and got out of the way. It also broke this mini area. So what's the story? So today the CEO is talking on CNBC at 10:30. So maybe that produces some kind of bounce. So for me, I might look for a negative to positive move. Red Dog reversal will be at 12.97. Maybe it opens lower, tries to bounce back a little bit and test this, area here for a nice trade. All I'm trying to be looking for right now is nice trades. If for some reason Hastings is taken out of context or doesn't say anything worth, listening to, here's the gap support, which is a 204 to 206. So I would use yesterday's low as a pivot. Perhaps it tries to, bounce up a little bit. It is pretty, it's sizably off the highs of the year, but also, look good how far it is off the lows of the year. So, know your time frame. For right now, it could be worth a look this morning just for some kind of cute cash flow.
All right, and LinkedIn showed signs of fatigue yesterday as well. Where would you say the next level of support is here?
This is very similar too, where you have on a macro level, it's had an unbelievable run, but intermediates flashing signals that it could have more corrective activity. It started, after earnings when it closed high, gapped down. Okay, from there it held macro support here the first time. Then it tried to fill this gap and kind of failed. Then you had this mid-level area that I think Darcy was talking about, and it broke below it. And then yesterday we talked about 170.50. Some guys made some money shorting that, and look what it broke. So now here you have a few different areas. This is one much bigger support area. Actually, you can even write this. So there is a void between where it broke and where you have new support. And I guess if you think on a micro terms, you could use yesterday's low as a pivot. It's 167, so if it goes below, comes back above, you could get some kind of cute cash flow trade to retest this line about 170.5. So I think there's opportunity there, but overall, it does seem like it's trying to work its way down to the 160s.
Now Apple Chief Tim Cook has come out defending the company's innovation, an issue we've talked about many times in the past. And he's actually said that he believes the company could have several game changers in store and that wearable computers could be one of them. So what do you think of his comments, and could it perhaps be a catalyst for the stock?
The question is when. Is it this summer? Is it in the fall? Is it next year? Come on,
something more concrete.
Yeah, something more concrete. Everyone's kind of done with the hearsay. Right now people want the proof in the pudding, and Apple's never had to do that before, but recently, because of the stock decline from 700 down to 400, and recently between them getting questioned about their cash in foreign countries and their growth slowdown and his quiet nature where he hasn't been too bold, Apple is more like, you have to prove yourself, where before it didn't have to be that way. Anyway, yesterday it seemed as if this inverted head and shoulders pattern was going to start to get a little friskier, but it didn't happen. Okay, you look at this inside range right here, and you will see that, I talked about, I came in long yesterday, I said, if it was down, I probably wouldn't try to buy above 448. Instead, it opened above and then couldn't hold it. So that got me out of my stock short term. You look here, you almost have like a little bit of a wedge type pattern where, it is opening lower today. So if they want to keep Apple in the game, and keep it, looking good, or guys really interested, it should go negative to positive today and trade back above yesterday's low short term, which is 440.85. If it were to close below, just say 430 today, I think a lot of people would start losing interest, that this is just the same Apple and it's lethargic and let's wait and revisit it, including me. And then here is a bigger pivot. So either way, let's see what type of action. There's been cash flow almost every other day where when it opens lower, the buyback kicks in and goes negative to positive, and sometimes likes to be strong when the market's weak. So maybe, they'll take his remarks and give him and just cause that to be a catalyst with the buyback. But at this point, coming flat Apple, I'll look to see if it can go negative to positive and if there's relative strength. But I think what traders should be listening for is, sometimes when they have a new product or a new innovation, they send out that evite or that invitation to the press. So if you hear on the loudspeaker, invitation to the press, blah, 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 maybe that would be a little bit of a catalyst, because then people say, finally, we get to see something potentially new and game-changing, which we haven't seen for a while.
Well, a fairly quiet day as far as economic events go ahead of us. What do you think you'll be focusing on as you head into the trading session?
I'm going to look for some tactical negative to positive trades. I'm not sold on the fact that today we could have the same type of action as last Thursday or Friday, where we were down considerably and went positive. But I do think at some point they try and take us off the lows, and I'll see if there's anything that can go from negative to positive and show relative strength and give us some cute cash flow. If this pattern is going to build, it probably, the spiders probably want to stay above, 1635 or 1640 for the next session or so, and then get a little tighter before it picks a real direction. So at this moment, I think if you were long and you sold yesterday's up open, You have the opportunity to buy if you shorted yesterday's up open. I would definitely be covering some on this down open, and then let things pan out, and then use yesterday's low as a pivot for a lot of different type of short-term cash flow scenarios. And overall, on a macro basis, we're not even 3% from I think the whole range was 3.5% off the highs, and we've only been off max 4%. Normal markets do have corrections of 5 to 7% and can still make new highs in the year. So if you have a macro plan, don't kick that to the curb. Just know where you live and know how you want to operate and what kind of stress you want to have this summer.
And with that said, happy trading, everyone. Have a great day.
I'm Mark Sperling, Director of Trading with T3 Trading Group and contributor to T3 Live. Do you trade on your own, but you wish you enjoyed the benefits of a large trading floor? With the T3 Live virtual trading floor, we deliver that experience to you on your computer. On the VTF, you can follow the long and short positions of experienced professional traders like myself, Scott Redler, and others, and listen to our live radio stations as we navigate the markets. In addition, you get the added value of a large community of sophisticated and like-minded traders. Your membership to the virtual trading floor also includes access to our 2 very popular newsletter products, Off the Charts and the Price Point Sheet at no additional cost. In my opinion, joining the room will be the best trading decision you will ever make. I would like to invite you to begin your membership with a 7-day free trial. To get started, visit t3live.com and click on the Virtual Trading Floor tab. Have a great day, and I look forward to seeing you in the VTF.